Today's Sunday, August 16th, and this is news from the Frunk. Hey everyone, welcome to another News from the Frunk. Time to get frunky once again. In this episode we're going to cover the Q2 earnings report. So let's start by breaking down the numbers, and I'm going to be referring to notes as I go through this. I don't want to get the numbers wrong. So Tesla revenues for Q2 on a GAAP basis, $955 million. That's up 25% year on year, 2% sequentially, so a 2% increase from Q1 to Q2. So production is up a little bit. We'll talk about the production numbers in a moment, but it looks like that has stabilized as they've kind of maxed out the production capability of Model S on the line as it was, given the parts supply. Non-GAAP revenue, $1.2 billion, the biggest ever, up 40%. And the biggest difference between GAAP and non-GAAP seems to be the way that they have to treat the lease revenues that they're getting in for the cars. So lease accounting means that with GAAP they have to treat it one way. With non-GAAP they can include all that money as revenue. When it comes to profit, yet another loss, $184 million on a GAAP basis, $60 million on a non-GAAP basis. That loss continues to widen as that prodigious spending keeps going. At $426 million of capital expenditure in Q2. Now they've still got, or had at the time, $1.5 billion in cash and cash equivalents. Remember, they also had the $750 million credit line that they took out. Tesla said that they drew down only $50 million on that credit line, but there were quite a few questions from analysts about their burn rate, the capital expenditure, and whether they would have to do some kind of equity placing to raise more money. Now, Tesla was pretty adamant on the call. Elon and the CFO were pretty adamant that they were in a very stable financial position, but they said they wouldn't rule out an equity placement in terms of the ability just to manage their risk. Well, it turns out this week they did in fact decide to do an equity placement. They announced that they were going to sell about $650 million worth of shares priced at $242 a share, and that Elon was going to purchase $20 million of those shares. The market reacted quite favorably to that. The stock bumped from about $239, I think closed on Friday at about $243. And I was surprised. I don't understand the workings of the stock market. It never makes sense to me. So I was expecting that when they made that equity placement, the market would react quite badly. But in fact, everybody seems to be quite happy. So what else did they talk about on the call? Well, they discussed the referral program. I covered it on the last video, where Tesla is offering owners $1,000 for every referral they make, and offering new buyers $1,000 off when they take a referral. And Elon clarified that they were really just doing a test at the moment to see what the impact would be and whether it would affect the rate at which they needed to build out and invest in new stores. So we will have to watch and see if that continues. Now, one thing that was a lot of discussion about on the call was a change in the forecast of number of vehicles to be sold this year. The original number was something like 55,000, and on the call Elon reduced that to closer to 50,000. The explanation for that was a less aggressive ramp up of Model X. I think previously they had talked about Model X being released in September, which they still confirm they are going to do. But then they would ramp up very quickly during Q4, October, November, December, and would be pretty much at full production at the end of December. I think they've now adjusted that. They're saying it's going to be into Q1 before they reach full production. So what was going to be a production or a sales forecast of 55,000 cars this year, they reduced to 50,000 cars this year. And hidden within that, or discussed within that, was this question about how many cars per week they were going to produce. They've previously talked about 2,000. They clarified that that is probably the max that they will produce out of that existing Model S, Model X line, and they will actually be targeting maybe 1,600 to 1,800 per week as an average. Talking of production, there was a question about the relative numbers of Model S and Model X that were going to be produced on the line. They are targeting 50-50, so roughly 800 to 900 Model S and 800 to 900 Model X. But they said it could swing 60-40 either way, depending on what the specific demand was and the parts availability. And they did also say that initially they are going to bias the line to Model X. They've got who knows how many, but apparently over 20,000 reservations for Model X. So they want to begin satisfying those reservations as quickly as they can. So I think we are going to see a slowdown in the production of Model S as they try and get those Model X cars out there as quickly as they can. And in terms of that production growth, they did still say they are confident of that 500,000 cars a year by 2020, and maybe even more than that. Now, in order to be able to hit that 500,000, the biggest factor, and of course that 500,000 is based on Model 3 sales, in order to be able to hit that, they're going to have the Gigafactory producing at full capacity by 2020. Now, one of the things they also said was that they've been looking at the design of the Gigafactory, and they believe that by changing the layout and maybe tweaking the design, they will be able to produce significantly more than the 50 gigawatt hours per year of cell capacity that they had originally talked about when they announced the Gigafactory. So that would put them in a good position if they did want to scale car production, but I think it's more likely that that extra production is going to go to Tesla Energy. They also confirmed that Model X deliveries will happen in September. They are still talking about the configurator being available this month, August. It is now August 16th. We have yet to see the configurator, but coming soon. One of the other things they mentioned was the version 7 software and what they're now calling highway auto steer. So the first iteration of the autopilot capability. Elon said that that software would be available to the early adopters, the public early adopter program, which I think is beta users by any other name. That was due yesterday, August 15th. Now, all the beta users sign an NDA. They're not allowed to say anything, so I can't confirm, and I'm not one of the beta testers, so I don't know whether they did do that code drop yesterday. But they have talked about releasing the software publicly in a production software release 1 to 2 months after that. So we're looking from mid-September to mid-October to get the highway auto steer out and available to everybody who has the autopilot equipped cars. And then last but not least, with regard to the Q2 earnings call, Adam Jonas from Morgan Stanley, who is pretty positive about Tesla, was talking about the quote from the CEO of Uber, who said that he would buy, if Tesla cracks the autopilot, that he would buy 500,000 Tesla cars in 2020, so the entire year's production of cars. So Adam Jonas asked Elon, would Tesla simply just cut out the middleman and sell on-demand electric mobility services? In other words, why bother selling your cars to Uber? Why not just offer an Uber-like autopilot service yourselves? To which Elon responded, that's an insightful question, and I don't think I should answer it. Unusually tight-lipped for Elon, who normally gives a straight answer to pretty much every question. So have we seen a hint of yet another business model from Tesla, the ever-expanding empire? Are we going to see an Uber competitor coming in a few years' time? Who knows? So overall, a pretty good Q2 earnings report. Record revenues, record deliveries, 11,507 deliveries in the quarter. Produced 12,807 cars in the quarter, again a record, but also record losses. $60 million on a non-GAAP basis, $184 million on a GAAP basis. Clearly lots more capital expenditure to go. Gigafactory continues apace. According to reports in the Nevada press, the Gigafactory build-out is slightly ahead of schedule. Lots more money to spend there, money to spend in the Fremont factory as they build out the new Model 3 line. But with the cash and cash equivalents they've got on hand, with the $750 million credit line, and now with that equity placing, it looks, certainly to me, that Tesla has a pretty good financial basis on which to continue this crazily aggressive growth. So that's it for this episode of News from the Frunk. Back again soon.